You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hi, Jim.
Well, apparently we're seeing some positive price rises for precious metals.
Well, they've been pretty strong the last week or so, and some of the share prices are doing very well. Some of these producers are announcing their last quarter production, which is up sharply, and others are just moving up because they're a good company and people like them.
Of course, when shares start to go up, and maybe you just bought some recently and you thought it was the bottom, you're very tempted to take a quick profit. Is that a good idea?
I think it's good not to chase the market. You know, the assumption that I'm looking at is that we've started a new gold and silver bull market on a secular sense, because the secular bear looks like it's breathed this last day of November. We could still see lower prices, but I think it's less and less likely the more these prices that we see now are holding. Gold and silver are both quite strong today. And so it's tempting when people see a stock to go up sharply where they thought it was going to go and have felt that way for a long time to figure, well, I better get going here and go all in or I'm going to miss it. And so usually you're not going to miss it. You might not get the low tick that was available a couple of weeks ago or even a month ago, but the idea is to be conservative when you're buying and try to buy reactions. And what we really want to see, if this is a bona fide new bull market, that we want to see higher lows and higher highs over time. And that will give us further confirmation. So we watch for that, and when we can, we buy stocks that we feel are undervalued, that haven't picked up the big mojo just yet, but we keep money in reserve so that we can buy weakness and maybe even sell a little bit into strength rather than trying to just buy the strength and get all positioned and then watch it drop a few days after we buy it.
If you do sell early, should you keep that money in reserve to perhaps take advantage of a sudden little correction? Yeah,
there's a lot to be said for that, and you may have another target that just hasn't moved up yet, but that you feel it's just as good as the one you sold at a higher price, in which case you might go right ahead and buy that. But one of the things that can happen, and I used to have this problem myself, I still have to watch against it, is not to get too frenetic in your trading so that you're buying and selling constantly, because you might do it right 3 or 4 times, and then you're going to hit a couple that aren't doing too well, that you paid too much for or whatever. So it's better to try to keep a little calmer than what the market is, and buying and selling, like Stu Thompson says, smaller than is rational.
What will we see first? A big jump in the price of physical gold, or are we seeing stocks for mining companies rise before the actual physical product?
Well, we're actually seeing both. We're seeing some of the royalty companies and some of the stronger companies have actually been base building for the last month or two, a couple of them, some of them that I follow. And so they've been establishing either a big sideways base, trading well off of the low tick that they may have made a month or two ago, or some of them are actually establishing higher lows and higher highs, which is very interesting. And until just the last couple of days, the gold had actually been stronger than silver on a relative basis, but now today silver is quite strong. So given that there's that 90% correlation over time between the price of gold and silver in terms of the directional movement, this is what you'd kind of expect. So if gold's been up for a few days, you would watch for silver to start playing catch up, and that seems to be what's happening today.
Will lower crude oil prices result in lower production costs for mining companies, making them more profitable?
It really should, and I think this business of, $45 oil, which is hard to believe because a few months ago it was $105, that's going to cause a recalculation of just about every aspect of business out there, whether it's in the mining sector or anywhere else, and of course definitely in the oil patch. But this should translate for especially companies that if they haven't hedged their petrol costs at higher prices, it should really help them out going forward.
And before we cry a tear for the oil companies, there's still a huge gap between what they're being paid to produce the oil in the ground and what they're charging at the gasoline pump. And of course, they add value to the product by refining it and turning it into different products. And so if I roughly calculate correctly, when using liters, when oil was nearly $150 a barrel, we were paying $1.50 a liter. Just multiply that by 3.8 to get U.S. gallons. But the fall means really if the prices have dropped 50%, then we should be paying 75 cents a liter right now, and it's $1 in Vancouver.
I've noticed here, too, in our area, some of the price leaders like Costco have been dropping their prices faster, and I think they play it a little closer to the vest about how much in reserve they hold of the oil and so of the gas, and so they can respond more quickly. But I've seen some of the larger entities just down the street that are selling it for anywhere from 30 to 70 cents a gallon higher. I paid $1.99 US for a gallon night before last, and if these prices that we've seen in the last few days hold, because petrol dropped another $2.50 a barrel, the crude, the day after that, I wouldn't be surprised to pay $1.79 here later this week if things stay where they are. It's pretty exciting from the standpoint of being a driver. I think that'll translate all across all the activities that we have in largely beneficial ways, but it's going to cost a recalibration for certainly the oil patch. You know, back to the metals, I think that we have a very exciting situation developing here, and whether we see sharply higher prices over the next month or so, or whether they back and fill, as long as they stay in the upper range of what we've seen over the last few months, I think it indicates that we have a chance to have a very interesting 2015 for those of us that have had the courage and the financial strength and a little bit of luck to hold on and not be blown away by a cyclical bear market that lasted darn near 4 years.
David, have you seen any charts that would indicate that the price of precious metals is connected to the price of energy?
Well, you can do a gold to oil relationship, which has gotten pretty much out of whack, but I think rather than trying to even divine how that might look right now is to kind of let the dust settle a little bit, because, you know, we're still seeing these swings of, we've seen several days where oil has been down a couple dollars a barrel, and it's going to take a while for everything to be digested on that. So I think coming back and looking at that in a month or two might be more valid than trying to see what's going on now, because there's so much volatility, and I don't know how much clarity a person can get right now as opposed to waiting a little bit.
Coming up with David Smith, Low Price Orphans, and the Vancouver Resource Investment Conference.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're chatting with David Smith, the senior analyst for the Morgan Report. Low price orphans, what are they, David, and why should you look out for them or maybe look for them?
Well, this is what I call a stock that, as far as I can tell, is going to be around. Might be a producer that's profitable, and maybe it has lost its following. There's a couple stocks that I follow where they just plain don't advertise very much, and they've got a very high quality operation going, but not many people know about it. And then also, when we have these sharp rises like this, the stocks that tend to get the appreciation right now are the ones that are experiencing a lot of movement on the upside. And so people tend to pile into those stocks, and they don't look back and say, well, wait a minute, this is a good stock too, but it hasn't gone anywhere. As far as I can tell, there's no reason why it's not going to move up pretty soon. And so that's what I've done with a couple that I've followed that I either had a position in or wanted to establish a position in. It's been real quiet out there with moderate volume, and I've gone in and bought these when on a limit basis with the spread bid-ask being pretty narrow. And I think I'll be rewarded if my decision is correct. We'll see, but I'm not overpaying for those stocks based upon what I think is the case with that company, rather than trying to, join the herd and chase these others that are going vertical right now.
How is our darling of 2014 palladium doing? I know China, car dealerships there were forced by the car manufacturers to buy so many cars a month, and they've finally convinced them, look, the market isn't there anymore, and our lots cannot hold any more cars, so please don't make us buy 100 cars every month if we can only sell 14. So is that affecting palladium at all? Well,
palladium is holding above $800 an ounce, and I think it's doing really very well. Even throughout this last few months when gold and silver were pretty much weak on the downside, palladium held up very well. So I think it's going to continue to be one of those leaders that maybe doesn't get quite as much attention as it did last year, but it wouldn't surprise me to see it keeping grinding irregularly higher, because there's still this big deficit out there, and from what I've seen, car sales are still doing very well. So I think it's a metal that's worth keeping an eye on.
The Vancouver Resource Investment Conference, the biggest in the world when it comes to mining interests. And we've seen, though, a bellwether change. It's on January 18th and 19th. David, you'll be there. And what do you think we're going to see this year?
I think we're going to see maybe more people attending than you would expect. We're seeing a lot of companies there, that some of which haven't been there for a couple of years. I think there's going to be a real feeling of guarded optimism about things going forward. And I think people that attend and get to hear a lot of these really high-quality speakers, of which David Morgan will be one of the keynote speakers. Maren Katusa will be there, Rick Rule, Frank Holmes. I mean, these are all, John Kaiser. These are all just top-notch speakers where you can learn more listening to them for 15 minutes than most people for several hours. Take some notes. I'll be taking notes. But I think people are going to look back and say, I'm glad I went to that conference because I learned a lot, and I picked up some ideas that I probably would have missed if I hadn't gone. Whether it's listening to these speakers or going over and talking specifically one-on-one with management in some of these companies, I think it's going to be easier to see who has the goods and who doesn't than has been the case over the last even 5 or 6 years.
David Morgan has a book coming out. We have Maren Katusa, who does have a book out, The Colder War, which is on the New York Times bestseller list. And his predictions about energy and the dispute with Putin and Russia's oil patch, a tremendously accurate book that predicted a lot of the stuff that we're seeing now. And I'm sure that both David and Maren are going to see some really packed halls just to see what they have to say.
Yeah, I think it'll be SRO for both of them. And I know I'm going to be there listening as well, too, and helping where needed. And I think it's going to be an exciting conference. So hopefully we'll see you there too, Jim, and maybe we'll get a chance to chat while we're there, have a cup of coffee or something.
Well, if the fire escape in my building doesn't collapse on me again like it did exactly a year ago, I'll be there.
We'll wish you the best of luck, Jim, and get excited and see what's going to happen this weekend. It's not that far off.
David, thank you very much for chatting with us.
You bet, Jim. Good speaking with you today.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com Radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. A lot of people are finding that these days. You can contact us at info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.